Joining me for a closer look at those market moves is Peter Armitage from Anchor Capital. Peter, thanks so much for your time this afternoon. So, despite Trump holding off on implementing tariffs, global markets seem to be downbeat with the exception of Asia. European markets slightly in the red, US futures also in negative territory. Are traders just holding off until, the trade policies are finalized?
Yeah, I think it's just complete turmoil out there. I think what you have to bear in mind is what markets have done over the course of the last year and 2 years. So you had about a 24% year in 2023. 2024 came out on the S&P at 25% up. So there's been a lot of positivity priced into markets. Expectations are quite high. And, I think people are trying to differentiate between bluster and negotiating tactics and real economic outcomes. I think if you take a step back and the difficulty is trying to work out where you will be in a few months' time. I think there will be some tariffs. I think it won't be as bad as, Trump's tactic, unlike any other president in the world, has been to negotiate with threats and Twitter and, tweets on X and other platforms. So I think we shouldn't be surprised if there are surprises. He's kind of set himself up for that. And it appears that a lot of the things are decided on a whim. You can see the things he said about South Africa. Many of them are not found in any truth. Some, kind of very emotional statements it's clear he hasn't had any real briefing on the South African scenario. But the impact of what he's threatened or what he's doing to South Africa is currently withdrawing some aid. So the people that are impacted in South Africa are the HIV sufferers primarily, it appears.
Initially, those statements did weigh on the rand and weigh on the local markets, but things seem to have turned today. Is there a particular reason, or are we just upbeat on the back of the green close in Asia?
Yeah, I think just remember the rand, 18 cents is 1%. So there's been 1% swing. It's not unusual to have an 18 or 25% move in a day. Often these moves have nothing to do with South Africa. What you have seen over the course of the last, especially the fourth quarter of last year, the dollar strengthened against all other currencies on an average by 7.5%. And the South Africa was almost exactly the same. So what happened to the rand was a function of the dollar against global currencies. Absolutely nothing to do with South Africa. And, I don't think you can read too much into 1% moves on any one day. That's, often those intraday moves have nothing to do with Trump. There's an exporter doing a big export order or vice versa. When the currency can move because of supply and demand. Then we try and explain it as if it's a change in sentiment either way. I think Trump's having a go at many, many countries around the world. I think we got kind of shocked when we appeared that suddenly we were in the firing range as well. I don't think it should be a surprise. And Canada, Mexico, Europe, UK, his style is to come out with aggressive remarks, have a negotiation, and then land up in a different place to his boldest threats.
It's definitely going to be a very interesting and long 4 years. Let's move over to some company news. Now, Multichoice and Canal Plus have agreed on a plan for their future partnership. Multichoice will keep its entertainment assets, but the part of the business that deals with the licensing, the broadcasting licenses and subscribers in the country will become a separate company called License Co. Of course, the structure coming as the deal has faced, regulatory hurdles. Your thoughts on the structure and whether, it'll get the green light?
Yeah, so I think it was a necessity to come up with a structure that complied with broadcasting regulations. So I think it's no surprise. And I think Multichoice and Canal Plus have been engaging and have done all their homework and met with all the people who are stakeholders and the vested interests. And the company appears positive that they can move forward with it. The share price kicked up 4 or 5% today. It's down about, and I think the share price is suggesting that a deal will go through because the actual income statement performance of MultiChoice has been horrendous. And I think the share would be closer to 70 or 80 Rand if there wasn't a deal on the table. But it is up at around 115 with the deal targeted at 125.
All right, let's move over to the retail space. Pick n Pay and Boxer out with updates today. Sales on both ends trending higher, and Boxer, of course, supporting Pick n Pay as its star performer. What have you made of those updates, Peter?
Yeah, so within Pick n Pay, the two businesses are obviously on very different trajectories. Boxer's been phenomenal. Like-for-like sales growth of between 5 and 6%, and then new store openings taking that to the 10 to 11% range. So that's fairly similar to what we've seen with Pepkor and Shoprite and the super performing stores out there in that segment of the market. So Boxer's continuing to, it listed a few months ago. It put some expectations on the table, and I think it's meeting those expectations. Pick n Pay itself is the opposite. Its like-for-like sales growth was not too bad. It was about 3%. But they're closing stores. They're going the opposite direction to Boxer. It's been a business in a lot of trouble. It's making big losses. It had to do a capital raise. It was kind of staring down the barrel of a gun. So Sean Summers has come in there to try and sort things out. A lot of that involved cutting places and businesses that are bleeding. And it was essential that for the stores that they were retaining, you got like-for-like sales growth, because it's cumulatively making a loss, and if it gets worse, the company doesn't actually have the balance sheet to be able to deal with the situation getting worse. So you have to remember that costs go up in these businesses by inflation or inflation plus. You've got rental, you've got people. So let's say that's going up at 4 or 5%. You need like-for-like sales growth to be going up by more than that to solve their issues. So the numbers are still well behind the industry, but I think positive relative to quite low expectations given the state of that business.
All right, let's just hit pause on the conversation, Peter. Before we get to your stock picks, let's reflect on some counters that have found favor with your industry peers.
Very positive when compared to the other retailers. The fintech sector keeps on gaining ground. I think it doesn't really matter what happens with the ball. South Africans tend to be good at lending each other money and also selling stuff to each other. And Pepkor is really doing very well in that respect. I'm not saying it buy it today or even this week. We all know what the state the markets are in, but if you can pick it up at a reasonable price, I think that's a retailer to go for.
Yeah, it's a little bit odd in this world, and I would agree with what Rikus is saying. I mean, you don't want to fill all your buying orders today. I think you'll have an opportunity over the next while. But if you look at this business, it's got 3 trillion rands worth of AUM. If we get a bit of inflation, the reality of it is cash and bonds are not going to offer you a shield. So I would imagine that equities, which I think is probably more of their niche and where they lost some AUM over the last year or two, augurs well. But I think the forward multiple's about 8.5, if I remember correctly, and the dividend yield's about 8. So even if you're not a wildly optimistic global bull market fan, I think you're being compensated very, very nicely. And that 8% dividend yield also factors in some of the difficult environment that they've been operating in. So I suppose what I'm saying is I think asset markets globally, particularly maybe some of those like the UK and Europe, which they're obviously in record territory, but they've had a very dull 5 years. Those markets do well. I think a company like this could do well, but I'm saying it's a cautious way of playing a bull market over the next few years. But I do agree with Rikus. I think you want to just be a bit patient as you buy.
All right, so let's get your stock pick. Our other analysts there choosing local counters, Pepkor and 91. You're also going local, right?
Well, locally listed, but it's a foreign business. So Mass PLC, which is listed and owned primarily by South African investors, is a Central and Eastern European property company. And it's nothing to do with the trends out there in the market or what we're expecting from market conditions. It's very company specific. They've got a bit of a mess at head office level, where there's a subsidiary that they own 40% of that they've got a funding obligation to. And they've made an announcement that by the time they put out their results by the end of this month, they're going to unravel that. And the company will revert back to a normal holding company owning 100% of its assets. So it's the resolution of an internal corporate fight. The shares trading at below 22 Rand. We think if that gets positively resolved, it can head up to 28 to 30 Rand. The risk to it is so the market is now, the share, when they announced this, the share price went up from 17 to 22, 23 Rand. So the market's excited, but is now getting nervous because it actually has to get over the line. You were talking about that multi-choice scenario earlier. It's deal or no deal. They did put out some announcements to the same effect 6 months ago and then withdrew them. So it's, it'd be hard to picture them coming again and then again disappointing the market. But, which is why the share is trading at 22 and not 28 or 29. All right. So we watch with bated breath. But it's, if it all comes through, there's a nice risk reward trade.
So, Mass, one to look out for. Peter, thanks so much for your time and taking us through the day's markets action. That was Peter Armitage from Anchor Capital.